Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Andy Swan, co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you for having me.
All right, so we're talking Etsy. The stock's down nearly 20% this year. I mean, a year and a half ago, the stock was $149, so it's pulled back pretty significantly. Are you guys seeing bad data on this? Because it seems like as a facilitator in a marketplace like this, it's a win-win situation. Is it maybe a reflection of the consumer at this point?
Well, I think it's a reflection of the consumer for sure, but it's also a reflection of, kind of what Etsy stands for. I think Etsy's had to really evaluate that and has made some tough decisions. And, Etsy doesn't want to be eBay. Etsy wants to be Etsy, which means Etsy wants a human touch on everything that's sold through the website. And, I think that what we're trying to figure out here and what Etsy's trying to figure out is, how big is the market for human-made goods selling to people that really love items with a human touch. And so they've cut a lot of listings off of their site. They've really cracked down on what I would call just, resellers who, may buy something from a Chinese manufacturer website, mark it up and put it on Etsy. Etsy doesn't want that. And they're going through a little bit of a turnaround or they're having to make these tough decisions of, do we give up revenue in order to maintain the core value of what our company stands for? And I think that's what they're going through right now. And it's a tough period for Etsy. I think we've got to tip our cap to the founders and executives of this company who have made it, much bigger than anyone would have thought of when they first started. An excellent company with an excellent idea. We just can't figure out, and the market's having trouble figuring out how big that overall marketplace eventually can be. Etsy's customers are extraordinarily happy with what they buy on Etsy. It's by far the leading marketplace in terms of LikeFolio consumer happiness levels. But everything else is flat. Growth is flat. Web traffic is flat. Search volume is flat to down. So we see Etsy as a company that's in the midst of a little bit of I wouldn't call it a turnaround, but just kind of an exploration, a who are we, what do we stand for type of moment. And it's confusing Wall Street a little bit. And I think it will continue to do so. And I think the risk for Etsy continues to be to the downside as they go through this evaluation process and this kind of gutting of the junk that was on their website that might have brought some revenues and some profits, but was outside of what they wanted to be.
Andy, do you guys have any opinion or data, on Temu, one of their biggest competitors, yeah. Chinese-owned company that seems to be moving away from the U.S. That should open up a bigger window for Etsy, right?
Yes.
And it looks like articles I read, they think that this quarter may be the trough in terms of their weakness and possibly a bullish tone to what they're talking about. Do you guys have any opinion on what Temu reducing their exposure to the U.S. means for Etsy?
Yeah, it's twofold. So what it does is it eliminates, a little bit one competitor that was definitely taking away some of those buyers that really didn't care about the human touch. They just wanted an item at a cheap price. But the other thing that Etsy's had to deal with because of this is that, an analysis was run and 30% of Temu's best-selling items could be found on Etsy at higher prices, just simply a flipper account. And that's not what Etsy wants to be. And so they're having to crack down more on these Temu items coming through their marketplace and try to steer those buyers into Etsy, human-made items. And so I think it's both. It, opens up, it gets rid of a competitor in some ways, but it also funnels that competitor through your marketplace in ways that you might not like, that costs you money to validate and to kind of police those listings. Sure. So, overall, I think Etsy's in a good spot. It's a really good company. But unlike Starbucks, where yesterday we were talking about Starbucks, having a low bar and this really great history of executing really quickly in terms of a turnaround, we don't have that history. We don't have that confidence in Etsy simply because we haven't seen that proven out over the last 10 to 20 years like we did with Starbucks.
Yeah, and the tough macroeconomic environment not lending to this, and that's maybe why Shein and Temu are doing so well. But Andy, if you look at the mentions count, I mean, are they making any inroads against their competitors, whether it's Amazon and eBay and Shopify and some of the others at this point? And do you have an earnings score on it?
Yeah, again, I think they're pretty flat. I think what we're seeing is that they are intentionally, kind of holding themselves back because they're holding themselves to an artisan standard that others are not. And so that's a tough process to go through. I think at the end of that period, they'll be a better company. They'll have better sellers and better buyers. But it's a tough time to say I'm ready to buy into this turnaround story on Etsy. We definitely think in this earnings call and into the near future that the risk is definitely to the downside. We've got a slightly bearish earnings score on Etsy.
All right, great stuff, great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at LikeFolio, breaking down the data for us on Etsy. I mentioned